Bitcoin is in an early phase of its adoption. So when it goes from, say, 0.1% of people own Bitcoin to 1% of people own Bitcoin, and then it goes to 10% of people own Bitcoin, you get that hyper deflationary force, right? So the value of every individual Bitcoin and overall Bitcoin market cap goes up, exponentially, let's say over this past 10-year period. And so prices denominated in Bitcoin collapse. But in a world where Bitcoin's bigger, right? If it starts to approach total addressable market, maybe 40% of people own Bitcoin. It's one of the major currencies. It's used, and it's kind of now slowly settling at that high level, that plateau of adoption.
In today's show, Lyn Alden compares Bitcoin with gold as people is preparing for a market meltdown. Alden discusses the security issues of Bitcoin and the transactional advantages of gold. Lyn also makes a Bitcoin price prediction and explains why she owns gold in the portfolio. If you're into crypto, this video is for you. And check our pinned comment for some massive signal bonuses.
I think in a world where, there are people that are like young teenagers right now that never existed in a world where Bitcoin didn't exist, right? And so what happens when they're 30? And so I think that some of these things that seem a little bit complicated now become second nature, kind of like a checkbook, especially when you combine that with the ever-improving UX of the space in, say, these 5-year increments when we look at it. So I think that's one answer. And then two, just due to some of the scalability limitations or due to convenience, I do still think you'll see a lot of people using custodial services. But right now, in this earlier environment, basically, having a tech background helps you understand which of these technologies has legs to them, which don't, at least on a probability basis. And then two, there's so much new kind of promises and hype and things that get rug pulled over and over again. That's like an era of this system. It's kind of like how when it became more popular to invest in equities, you started to get those boiler room penny stock dumping operations. And you don't really see them as much anymore because it takes time for both regulators and even putting regulators aside to catch up with it. The consumer public takes time to realize, no, that's a scam, that's a scam, that's a scam. I'm not going to fall for that anymore. And so the public gets more hardened against types of things. And I think crypto for the past 10 years or so has existed in this window, or, trusting an exchange, trusting the sketchy offshore thing. It's been in this regulatory limbo, big money to be made. That's an environment where these rug pulls and scams are going to happen on a pretty high basis. But over time, people get more, they understand how to identify scams in the industry better. They understand how to prioritize safety better. They get rug pulled once and then they vow never again. Sometimes they even go too hard in the other direction. They're like, I'm going to be super hardcore now because they got rug pulled by Mel Gox or something, right?
Yeah.
You have people like that. But so people learn their lesson, or they learn from people who learn lessons. And so eventually this kind of wave of fraud dies down and you start to get serious entities that are saying, okay, we're going to custodian your Bitcoin. We're going to make your Bitcoin easier to use. We're regulated. We're audited. We do proof of reserve, whatever the case may be. And should you not want to trust us, pull your money out, right? So only leave the money with us that you maybe want to spend and have easy access to. And if you want to go into cold storage, it's a little bit of a learning curve, like writing a checkbook.
In the continuation of the episode, Lyn puts safety first. Safety is paramount in the crypto world. While Bitcoin itself is secure, custodians elevate its safety to the next level, ensuring peace of mind for crypto holders relative to gold and silver holders. These trusted guardians use multi-sig tech to add layers of security. As a result, crypto holders enjoy enhanced protection. Precious metals don't offer these benefits and will never do, so crypto is superior to gold and takes safety to the next level. But first, like and subscribe to the channel to stay informed, and check the Bybit promo where you can get free $20 just for creating an account with no deposit, so you can start trading real money today.
Some degree of cold storage is one, cheaper and less intimidating than basically a more complicated electronic device, for example. I think recently, for example, it's been announced that Block Inc. is coming out with their own hardware device and their own kind of mechanism for how to make that more Apple-like, more easy to use. We're actually holding self-custody, but it's not you don't have to be a techie to do it. So one is that the actual user experience of directly interacting with Bitcoin, whether it's Bitcoin, Lightning, other types of open source stuff on top of it, that generally gravitates towards easier. And I think right now we're still kind of in this environment, like the internet before the browser was invented, or the internet when like the first browsers were being invented. That's kind of the user experience that we're at right now in this ecosystem. And I think when you look out 5, 10, 15, 20 years, I think we still have a lot of low-hanging fruit in order to have a much, much better UX. And in order for that to fail, either you'd have to have a catastrophic technical bug of some sort, or you'd have to have the majority of those federation entities steal from you. So not just one entity, but you'd have to have a majority of entities kind of grouped together to steal from the users of that system. And of course, at that point, you can have legal recourse and things like that. So basically, in this kind of world that we envision here, at least as like a thought example, you have the underlying base layer. You have various open source layers on top of that are still permissionless, still open source, still non-custodial, but that are faster and have other trade-offs. And then you have custodial arrangements that you can choose to have some of your money. So for example, I can have an environment where maybe every quarter I pull my surplus back into my cold storage savings with one transaction, but I'm fine with leaving, say, the past month of earnings or the past couple months of earnings in my checking account type of environment on this more custodial type of platform. And so basically in that world, you choose your own layer of what makes sense to you. If you've got in that sort of world where either gold or Bitcoin is money, most things generally get cheaper over time. Most things on average get cheaper over time, not necessarily every single year, but as long as civilization's advancing, as long as technology is getting better, you'd expect most things to, or at least some things, to gradually get cheaper when denominated in your Bitcoin. Bitcoin is in an early phase of its adoption. So when it goes from, say, 0.1% of people own Bitcoin to 1% of people own Bitcoin, and then it goes to 10% of people own Bitcoin, you get that hyper deflationary force, right? So the value of every individual Bitcoin and overall Bitcoin market cap goes up, exponentially, let's say over this past 10-year period. And so prices denominated in Bitcoin collapse. But in a world where Bitcoin's bigger, right? If it starts to approach its total addressable market, maybe 40% of people own Bitcoin. It's one of the major currencies. It's used, and it's kind of now slowly settling at that high level, that plateau of adoption. You no longer have that kind of exponential move upward. Instead, basically, you have a scarce unit, and as technological production gets better over time, most things should get gradually cheaper when denominated in Bitcoin. If you're in a developing country, you've got the equivalent of $500 worth of savings. You want to make payments. You're maybe not. You're not thinking of like Michael Saylor level of security here, right? You're not how are you going to store $1 billion worth of Bitcoin? You're thinking, okay, how do I not get rug pulled? How do I make transactions? What is efficient? How do I save on fees? That kind of thing. If they start to build surplus savings, then they might start thinking more about security and pulling that deeper towards them. So I think the most direct comparison is Bitcoin to Fedwire. So if you look at the Fedwire system, it's a settlement system in the United States. It settles, and this is not like a typo, 1 quadrillion worth of gross settlement volumes per year. So 1,000 trillions. And it does that with these almost exactly the same number of transactions as Bitcoin does. So it's got something like 7 transactions per second. Unlike Bitcoin, it doesn't work around the clock. So those transactions are consolidated during business hours. But the way it works is that you have an average transaction size of like 5 million, and you have 200 million of those a year, and so you get a quadrillion worth of settlement volumes. And then you have other things that are built on top of that, and they can batch transactions and send them over these settlements. And so Visa is not a direct comparison of Bitcoin, because Visa is a layer on top of a system. So they're a signaling mechanism for banks to settle and for the underlying unit of account to do what it's going to do. And so with Bitcoin, we've generally seen a direction similar to that so far. And this really happened over the past 5 years or so. We have a breaking into various layers. And you saw the underlying base layer. That's like your gold and Fedwire combined into one system. So it's both the units and it's the ability to settle those units and verify those units. On average, it's a 10-minute plus transaction time. And as you pointed out, you're limited to roughly what Fedwire currently does, which is a pretty large number of transactions, but not big on the global scale. And then you have higher layers on top of that that are able to process a lot more transactions and then settle back to that. And so Lightning, to clarify, Lightning is not a third party. Lightning is another open source technology. All it is basically 2 of 2 multi-sig channels on top of Bitcoin. And so unless there's a technical bug, there's no custodial risk that you're taking on by using Lightning. You're taking on some degree of, you're instead of having your Bitcoin in cold storage, it's in hot storage, but it's non-custodial.
Wrap this video up, here's a quick recap of the key lesson of today's video. The lesson today is that Bitcoin is superior to gold in safety with a multi-sig tech, and that the speed of transaction and utility in the real world could actually be superior. However, gold is still a very good holding for the portfolio, and owning both of them could actually enhance returns in the long run. What do you think about Alden's points? Do you agree with them? Post in the comment section down below your honest opinion and send this video to someone who hates crypto. And I see you next time.